Before we get into the details of Standard 1, for those of you who are new to this industry, I would like to give you a general overview. And understanding the investment management industry and potentially your role in the industry will help you answer the questions in this topic. The way most of the CFA questions are organized, there is some protagonist. So the question will refer to John Doe, CFA, or Mary Smith, who's a CFA level 1 candidate, and a scenario will be presented, and you will have to determine what standard is being violated, or what standard is not being violated, or what the correct course of action is. So very often you can relate to the person who is faced with the situation and then try to answer the question. But first, let's just make sure you have an overview of the investment industry. And by the end of this slide, I would like you to have a general understanding of all these terms on the left. Let's start with a simple situation. So who are clients or investors? These are people with money that they want to invest. Now, let's say that the clients or investors do not have the time or the knowledge to make investment decisions themselves. So what do? They give their money to an asset manager or an investment management firm. So I'll just call this asset management. So the money goes to an asset management firm. Now, what will this entity do? So as actually a lot of what you study in the CFA course has to do with the work that goes on in this box. So the asset management company, and let's say one possibility is that you work for this asset management company. So you determine that with the client's money, what is an appropriate portfolio for this client. So what sort of stocks, what sort of bonds, and what sort of other investments must you make with this client's money. The details of this you will see in a lot of detail later in the course. But that's what the investment management company does. Let's say that the investment management company decides that for this investor they need to buy a few stocks and bonds. What happens next? The money is then passed on to a brokerage firm. So to a brokerage firm, and the brokerage firm is the entity that actually conducts the transactions. So these are the guys who actually buy the securities. Now, in terms of your role, you might either be working for an asset management company, or you could be working for a brokerage company. The brokerage, remember, is the entity that physically buys the securities. Now, so far we've covered clients, asset management, brokerage. What does this term research mean? And specifically, there are two kinds of research: sell side and buy side. What a lot of brokerage firms do is they, in addition to buying securities, they also do research. Research in this context basically means equity research or fixed income research. So brokerage firms will publish research reports on stocks. So for example, there might be a research report on XYZ company, and this research report might will make a recommendation which says buy or sell or hold, and then there is an analysis or research justifying this recommendation. So the research done by somebody working at a brokerage firm is referred to as sell side. The simple way of thinking about this is that brokerage firms are involved in selling securities for the asset management firm. So their research is referred to as sell side research. What about buy side? Coming back now to the investor. Broadly speaking, we might have two kinds of investors. One is a individual investor. So this might be a rich person who simply wants to invest his money. The other kind of investor is a institutional investor. So these might be things like mutual funds or pension funds and so on. So these are entities with very large sums of money to invest. And at large institutions, there might be people responsible for investment. And when they try to research what to buy, what not to buy, that is referred to as buy-side research. So this gives you a general idea. Just a couple more concepts. Very often at brokerage firms, there might also be a department called a investment banking department. Now these investment banking departments have relationships with large companies, and these investment banking departments would advise large companies on, say, merger and acquisition activity. These entities might help underwrite new shares, which means raising money by helping these companies sell new shares or issue new bonds and so on. So that work typically happens through the investment banking department. So notice that the investment banking department gets its money from the companies. So these departments have an incentive to keep companies happy. Brokerage firms, on the other hand, make their money by buying and selling securities for asset management firms, or sometimes even individuals might or investors might come straight to a brokerage if they want to make their decisions themselves. So these guys, the brokerage firms, make money through transactions. And when a brokerage firm issues research on a company, this research should be completely unbiased. It should be research that serves the investors. And obviously, any research report written should not be influenced by the company on which the research report is being written. The final term that I'll talk about is the initial public offering. You'll see this in a lot more detail when you do equity later on in the CFA course. But very briefly, sometimes these entities help a company with a IPO. So this means issuing shares or helping these companies issue shares for the very first time. Now, if an IPO is hot, and what that means is that lots of people want access to those shares, then there are often ethical issues about who should receive some of those shares. And when we get, and later on in these series of lectures on ethics, I will come back to the concept. We'll come back to some questions related to initial public offering. So that's it in terms of an overview. There is obviously a lot more to this, and as you go through the ethics course, and more importantly, as you go through the whole CFA course, you will learn a lot more about this material. And I have said this before, and I will repeat that it's extremely important that you study ethics at the beginning of your CFA course, and also go back and study it in a lot of detail towards the end. Things that don't make complete sense now will make a lot more sense once you have gone through the whole CFA course.